Hello and welcome to ATFX's UK CPI preview. My name is Nick Twidale, I'm the Chief Market Analyst. And as always, if you haven't followed us on any of our channels, please do follow and we'll keep you updated with everything that's going on in the markets and how the markets are trading, particularly with regard to FX, which is where I come in, I suppose. So big data out this week. And it's a very interesting week on the macroeconomic calendar because we don't really have too much in the way of US numbers. So the majors get a chance to kind of move and the crosses get a chance to move in line with the local jurisdictions. And obviously the UK, we've seen a lot of volatility in the pound over recent weeks and months. And we did get a rate cut from the Bank of England last time out, but also from the Bank of England, a confusing forward guidance really, with the MPC pretty much split, with some members voting to hold, some for a 25 basis point and some for a 50 basis point cut. Those guys that are looking for the 50 basis point are looking to get ahead of what could potentially be big global growth troubles with, as we always know, President Trump's tariffs and trade issues. So a lot going on in the market. But once again, when we kind of get to these situations with central banks, when they're a little bit confused, they will always go back, and generally they will always go with how the data is indicating how the economy is going. And nothing is more important than central banks, maybe apart from the jobs market, than inflation. Inflation normally tops out, but it's normally a bit of a twin mandate between inflation and jobs numbers. Inflation data out this week for the UK could see some big moves for the pound, especially if we get some differentials from what the market's expecting. And given the volatility we've seen in the market already this year, we are starting to see volatility in numbers, and that equals trading opportunities for FX traders. So let's have a little look at the numbers that we're expecting coming up later this week. So CPI data, the main headline number, and this is really the one that moves, is that year-on-year number. When you look at some of the other jurisdictions out there, there'll be a month-on-month number that everyone's keeping a closer eye on. But really for the UK, it's that year-on-year number. Now, importantly, it's a big difference from last time out. Last time out, we got 2.6%, still above where the MPC would really like to see it. But expectation this week is for 3.3% to print. Now, that is higher, and that will also potentially keep the MPC on hold as we move forward, certainly to the next meeting. What we're looking at now is where's the pound going to go if we do get a print there. Core CPI expected also to print at 3.6%. Now, that's not too high on the differential from the headline figure. The core CPI last printed at 3.4%. So really still too high, and that's keeping those hawkish members, keeping those rates high that want to see sort of inflation come down a bit. Anyway, let's have a quick look at the charts, see where those trading opportunities are going to come in cable. And I'll even throw a couple of crosses in today as well, because that takes the dollar out of the equation and can give us a better long-term trend opportunity. Bear with me while I move over to our charts page. Okay, so here we are on my sterling chart page. Main pictures are obviously the cable, and it's going to be, if we're near these levels, it's going to give us a good opportunity, and I'll bring up the daily chart first of all, good opportunity to look for potential breaks or moves back into the range, depending on what we get from that number. So don't forget, we're looking at that headline number. We're looking for it to come in at 3.3%, last time 2.5%. Now, anything higher than that 3.3%, this is the longer term chart. Here's the yearly high just up here around, he says, waiting for it to pop up for him, 134, just under 134.50. We're trading about 75 points beneath there at the moment. But if we get a stronger print than that 3.3, if it comes in 3.4, 3.5, then expect a break to the top side, which could take us, and I think I'm getting a little bit of deja vu all over again, could take us up into this 140 level relatively quickly. I'll move us over to the hourly chart, and it's just probably going to give us a little bit more depth on what we're looking at there. Here we go. There we go. We're just trading off those highs. Here's the recent high there, 134. Looking on the hourly chart, you could trade a break of the 134, then go again if it breaks the 140, 134, 45, 50 level. And then you're really looking for a move that could accelerate up to the 140. It would be high levels, and it really would pull back on those rate cut expectations from the Bank of England. Obviously, conversely, a lower number that would see us move back down into the range. First target, this is on the hourly chart, would be 132.80, 200-day moving average. And then we're probably looking at these lows. And if you notice, these lows that we've got on the month of May coming in 131.40-ish coincide on the hourly chart with the trend line support. So that would be a good level to target for shorts, and obviously for a break if you think it's going to continue on to the south side. Now, I'll just pop up the most widely traded cross in the world, which is euro sterling. We're also sitting at a very nice level to trade euro sterling at the moment. As you can see, we're back in the range. Here's where sterling got crushed. Euro jumped on that euro infrastructure deal from the Germany way back. It seems way back. It's only a few weeks ago, really, towards the end of April, up to 87.20. We're back down now at 84.11, but we're just sitting, and it's kind of giving us a bit of support, that 200-day moving average. We're sitting around there. Once again, higher numbers on tomorrow night on the CPI. Could see that euro sterling level break. That is sitting at 83.82 at the moment, probably slightly different, but not too far come the number. Gives us a target down to that 82.80 level. And here you see in these recent lows, annual lows back in 2024, down at 82.19. A break there would really mean a fundamental change in what we've seen going on, and could lead to greater increases for sterling, and obviously euro sterling to the bottom side. Conversely, of course, a weaker number, and don't forget, we're coming from 2.6%, a weaker number under 3% would take us back up into this range it's a big move. It would be a big move to get back up to these 87 levels, but there's the resistance coming in around 87.20. So great trading opportunity on cable. Probably the break to the top side would get you much more better impetus. You know what cable trades like. You're going to get 100, maybe 150, depending on the size of the deviation, if we get a deviation on cable. On this euro sterling chart, lower print, back up to the top side, stronger print. It'll break through that 200-day moving average. We're going to target 82.80, and then you make a trading decision when you're down on that support trend line. So good luck with your trading. If you need anything from us at ATFX, please let us know. And thank you very much for listening. Goodbye.